Welcome to Big Picture Earnings Analysis.
Today we're digging into the fiscal Q1 2026 results from Uranium Energy Corp, or UEC.
That's for the period ending October 31st, 2025. Okay, let's get right to it.
Let's do it.
Let's start with the foundation, the core financial metrics for the quarter.
Right. So the headline production volume they reported was 68,612 pounds of precipitated and dried U3O8.
Okay, so just under 70,000 pounds. But what really grabs your attention here, or at least it did for me, is their cost structure. It's exceptionally low.
That cost structure is, it's the bedrock of their entire strategy. They hit a total cost per pound of $34.35 this quarter.
And that's total cost, right? Not just cash cost.
Exactly. To break that down for you, the cash cost per pound was $29.90, and the non-cash cost was about $4.45.
That 34.35 figure really needs some context because it's a powerful insulator for them in the market.
It absolutely is. I mean, just remember, their total cost per pound for the entire last fiscal year, 2025, was $36.41.
So they're already starting this year with lower costs.
Lower costs, even while they're accelerating production everywhere. Achieving that kind of efficiency, well, it sets them up as one of the lowest cost domestic producers in the world. It gives them huge insulation against market dips and just maximum leverage for when prices tighten.
And that efficiency is backed by a massive capital position.
A huge one.
They completed a big public offering, $234 million, which really solidified their balance sheet.
So as of October 31st, total liquidity is sitting at a staggering $698 million. That's cash, uranium inventory, and equities.
What's really crucial for you to understand here is that this massive capital base comes with absolutely no debt.
Zero debt. And what's fascinating isn't just the size of that war chest, but how they're deploying it, especially with their inventory positioning.
Right.
They are making a massive calculated bet on the future price of uranium. They're maintaining a 100% unhedged position.
That really is the defining strategic choice, isn't it? They're not locking in today's prices with long-term contracts. They're just holding the asset.
They're treating their inventory like capital, just waiting for the right moment.
And how much inventory are we talking about?
Right now, their physical inventory is at 1.356 million pounds of UIUR. At current market prices, that's already worth over $111 million.
And that doesn't even count what's in the pipes, so to speak.
Exactly. We have to remember that calculation excludes the nearly 200,000 pounds that's already accumulated in process at the Entergy plant. That's product just waiting to be packaged.
And they're not just sitting on what they have. They're actively using that balance sheet to accumulate even more.
Yes, and this is where the timing becomes so obvious. They've noted plans to expand that inventory by another 300,000 pounds.
How are they doing that?
Through purchase contracts, they locked in through December 2025 at a really attractive price of $37.05 a pound.
Okay, hold on. If they can produce it for $34.35, why would they buy it on the market for $37.05?
That is the key question. It's all about speed and market leverage. By buying inventory at a controlled price, they maximize the volume they hold unhedged, ready for sale at, potentially much higher spot prices later in the year.
So they're preparing for something.
They're positioning themselves to get the maximum benefit from any federal support that might come down after the Section 232 investigation decision. That could dramatically change the domestic price floor. They're betting on a massive price increase, and they're using cash to capitalize on it now.
So that's the financial picture. But here's where it gets really interesting for me. Connecting that capital to the actual, nuts and bolts of the operational progress.
Moving from the balance sheet to the ground.
Exactly. Let's start with their flagship Wyoming hub and spoke, anchored by Entergy and Christensen Ranch.
The focus at the Entergy Central Processing Plant, the CPP, has been all about upgrading capacity. They completed a full refurbishment of the yellow cake thickener and the calciner.
And this isn't just cosmetic work.
No, not at all. This is a major infrastructure upgrade. It supports that crucial shift to planned 247 operations, which is going to significantly boost their throughput.
And we already saw the payoff for that work almost immediately. They confirmed they packaged around 49,000 pounds of U3O8 in the second half of November.
Right. It confirms that the capital investment is translating directly into an accelerated production ramp.
And what about the mines feeding that plant?
Well, the development is ambitious. At Christensen Ranch, they're building 6 additional header houses in new well fields 11, 12 and the 10 extension.
So everything's happening in parallel.
Exactly. That parallel development is what allows for a sustained, accelerated pace for their ISR operations.
We should probably take a second here and just clarify what ISR means for anyone who might not follow the sector daily.
Good idea. ISR is really the game changer here. It stands for in situ recovery, which means in place recovery.
So mining without digging.
That's the simple way to put it. They inject liquid, a lixiviant, underground to dissolve the uranium, and then they pump that solution back up to the surface for processing at the central plant. It's cheaper, faster, and much less environmentally disruptive than conventional mining.
And to manage all that expansion, we saw their Wyoming workforce has already grown to 84 people.
Right, and it's not just optimizing the existing spokes. They've made the formal decision to advance the fully permitted Ludman project as a whole new satellite for Iragrey.
And Ludman is significant. It's not a small project.
No, it holds 9.7 million pounds of measured and indicated resources. The pace is remarkable, too. Engineering for the satellite ion exchange plant, the IX plant, is already progressing, and they started a massive 200-hole delineation drilling program in November.
So they are full steam ahead on bringing new capacity online.
Absolutely. They want to ensure a continuous supply chain for Iragrey.
Okay, speaking of rapid development, let's head south. The Texas operation, Burke Hollow, is also right at the finish line.
Yep. It's being touted as America's next ISR mine. They confirmed it's about 90% complete, and they're positioning for a December startup.
What were the final milestones they hit there?
All the critical ones. The IX columns are installed, the deep disposal well testing is done, and crucially, the three-phase power is installed and fully energized. The South Texas workforce is up to 56 people now. It's a complex project, and being 90% complete suggests there's very little execution risk left on that asset.
So if you zoom out, you have multiple assets, Iragrey, Christensen Ranch, Ludman, Burke Hollow, all advancing at the same time. It feels less like a simple production ramp and more like a massive orchestrated system launch.
That's exactly right. And that scale, it allows us to pivot to their true long-term strategic direction.
Which is becoming fully vertically integrated.
Precisely. The launch of the United States Uranium Refining and Conversion Corp, or URNC, is maybe the most forward-looking step they've announced.
So they're moving way beyond just producing yellow cake, U3O8. They're aiming right up the value chain.
Their goal is to position UAC to be the only vertically integrated U.S. company that offers both mining and planned refining and conversion.
Meaning they would produce uranium hexafluoride or UF6.
Yes.
And why is UF6 the critical step for you to understand here?
Because UF6 is the gas form of uranium you need for enrichment. It's the critical feedstock. Without a secure domestic supply of UF6, the U.S. remains dependent on Russia or other foreign sources.
For the fuel that powers pretty much everything.
Right. The big legacy reactors and, crucially, that upcoming fleet of small modular reactors, the SMRs. By stepping into conversion, they are aligning perfectly with federal goals for energy independence.
It's a massive bet, though. I mean, conversion facilities are complex, they're expensive. Is there real momentum here, or is this just a concept on a PowerPoint slide?
No, this is a very serious pushback by capital. They've already initiated a feasibility study with Fluor, which is a major engineering firm. They're expanding their technical team for URNC, and they're already engaging in siting activities across multiple states.
So they're moving from concept to execution.
They absolutely are. Okay, beyond conversion, let's look at the growth pipeline, specifically that huge Sweetwater acquisition.
That added 4.1 million pounds per year of licensed capacity and, what was it, 175 million pounds of historic resources?
The sheer size of the resource is what stands out, but the most important piece is its designation as a Fast T41 transparency project. This is where policy directly accelerates scale.
Okay, Fast T41 sounds bureaucratic. What does that actually mean for an investor?
It's crucial. It's basically a government mechanism that forces federal agencies to coordinate their permitting schedules. It just accelerates the whole regulatory process.
So UEC can get the approvals they need to turn Sweetwater from an old conventional mill into a modern ISR facility much faster.
Much faster than a competitor normally could. Speed is capital, right? And this designation gives them a massive advantage in bringing those 175 million pounds of resources into the production queue.
And we saw that acceleration immediately. They started planning for drilling and well installation on December 1st.
Exactly. And that brings us to their high-grade international asset, the Rough Rider project in Canada. This is a more conventional, high-grade deposit.
The initial economic numbers on that project were just staggering. A post-tax NPV of $946 million, A 40% IRR.
And an all-in sustaining cost, or AISC, of just $20.48 per pound.
Which is exceptionally low.
Top tier globally. And that potential is being actively validated right now. They've started a large-scale 34,000-meter core drilling program.
And the goal there is just to upgrade the resource category.
Simple as that. They need to move inferred resources into the indicated category. That data is what you need to support the pre-feasibility study, which gives investors the high confidence numbers they're looking for.
So all of this incredible activity, it doesn't happen in a vacuum. What are the key market tailwinds that make this aggressive strategy viable?
Well, the primary driver is the undeniable structural supply deficit. It is widening, not closing.
The gap between production and demand.
A huge gap. The long-term forecast suggests the cumulative deficit will exceed an astonishing 1.75 billion pounds of U3O8 between 2025 and 2045.
Let's put that number in perspective for you.
If you just look at current U.S. utility consumption alone, it's about 47 million pounds a year.
So a 1.75 billion pound deficit. That's like 40 years of current U.S. demand that just won't be met unless new, reliable domestic capacity comes online.
The need is desperate, and the market knows it.
And UEC's focus on domestic production aligns perfectly with all this unprecedented U.S. policy support we're seeing.
Absolutely. Policy is fueling this engine. Uranium was officially designated a critical mineral on November 7th. That opens all sorts of doors for government support.
Then you have the legislative actions, like the act prohibiting Russian uranium imports that was signed back in May.
Correct. And then there's the big one, the Section 232 investigation into foreign imports. The implication there is that federal support, maybe enlarging the strategic uranium reserve, is very much on the table.
A massive domestic price floor.
It could be. And that's all happening while you have executive orders targeting a four-fold increase in U.S. nuclear capacity by 2050. This isn't just about maintenance, it's about exponential growth.
And that political push is being mirrored by just massive accelerating demand from the private sector.
Especially from big tech. They need reliable, clean power for their infrastructure, and they can't wait years for new power plants to be built.
It all comes down to data centers now, doesn't it?
It really does. Electricity demand from U.S. data centers is expected to double by 2028.
Wow.
And this is driving strategic investments. You're seeing deals with Microsoft signing 20-year agreements to power data centers, Meta investing in SMRs. UEC is timing its production ramp exactly when this new, powerful energy hunger from the tech sector is accelerating.
So if we pull it all together, what does this all mean for you? The key themes seem clear. The cost-efficient production ramp is on schedule, it's advancing in both Wyoming and Texas, and they're translating financial strength into real pounds.
And that balance sheet is a competitive weapon. $698 million in liquidity, zero debt. It gives them maximum flexibility to capitalize on prices and fund their goals. Their timing is maximizing the leverage of their unhedged inventory while they build out America's future nuclear fuel supply.
And critically, that launch of URNC, the vertical integration move, it future-proofs their position in the domestic fuel cycle. They are aligning with powerful government policy and accelerating private sector demand.
This is a company positioning itself not just to be a miner, but to be a cornerstone supplier in the reshaping of U.S. energy infrastructure. The alignment is, well, it's impeccable.
Which brings us to our final provocative thought for you to consider. UEC's total license capacity in the U.S. is currently 12.1 million pounds per year. Now, consider that they're actively converting the Sweetwater facility, with its 175 million pounds of historic resources, into a modern ISR platform under that accelerated FAST-41 program. What kind of scale does this shift suggest for the U.S. uranium supply chain if that conversion proves to be rapidly scalable and cost-effective? If you can quickly move 175 million pounds from a historic resource into the ISR production queue, that fundamentally changes the trajectory of domestic energy independence. That's definitely something to chew on.